following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host for the show, David Blain. Thank you for joining us today on 94.1 FM WNBU in New Bern, as well as Cable TV 10 in New Bern, North Carolina. We appreciate all our viewers and listeners out there. Our topics for the show mostly come from you, so if you have any comments or questions on the show, topics you'd like addressed in the future, please give us a call. Our phone number is 252-633-0107. Our email is allthingsmoney@dlblain.com. That's just like it sounds, allthingsmoney@dlblain.com. We invite you to visit us on the web as well at www.dlblain.com. There you'll find information about myself, my firm, as well as archived copies of the show. Well, without further ado, let's get right into the show today. I thought I would start with a follow-up on a couple of things. The first, in case I haven't been able to dissuade you from becoming a day trader yet and to try to take a longer-term view of the markets, we've done a few pieces in the past about some of these quant firms that trade in milliseconds. They're constantly buying and selling securities. Their holding period is less than a second. And we've encouraged our viewers and listeners to try to stay away from that type of investing, to form a plan, a long-term strategic plan for reaching your goals. Well, in the past, we talked about how these hedge funds were purchasing server space in New York City to be closer to the exchanges. I explained how you sitting at home wanting to buy 100 shares of Coca-Cola, when you hit your mouse button to buy, some of these hedge funds, they literally see that order coming across the electronic markets. They purchase 100 shares of Coca-Cola, mark it up a fraction of a cent, and then sell it to you all in the blink of an eye. Well, this story comes to us about one of these firms called HFT, and they, it appears, have broken the speed of light barrier and set a trading speed record. You have to forgive me that the print on this is kind of small. This comes from nanex.net, which is a research firm, dated September 15th, 2011. Beginning at 12:48, 54.600 seconds, there was a time warp in the trading of Yahoo stock. HFT has reached speeds faster than the speed of light, allowing time travel into the future, up to 190 milliseconds in the future, or 0.19 femtoseconds. I don't even know what a femtosecond is. I never heard of that before. These firms are getting so fast, they have to come up with new measures of time to explain it. Okay, back to the article. It happened in just over 1 second of trading. The evidence buried under avalanche of about 19,000 quotes and 3,000 individual trade executions. The facts are indisputable. Based on official UTDF exchange timestamps, there's unmistakable proof that Yahoo trades were executed on quotes that didn't exist until 190 milliseconds later. And I'm not going to go into all the details of how trading and the timestamps and this works, but the point is that when you make a trade, there is a timestamp on that trade and then a quote with that you traded the security on, the price that you got. Well, in this case, it was so fast that the quote that was traded on was actually 190 milliseconds after the stock was traded. And I know this sounds confusing. The point is that if you don't understand this, I hardly understand this, don't be a day trader. There are people out there with machines and computers and algorithms that are set up to take your money if you don't know what you're doing. Now, if you can stretch your time frame out, get away from these hedge fund traders, a lot of the volatility today is simply a lot of trading going on. And if you kind of step back, I was talking with somebody the other day, the year-to-date return on the markets, or not on the markets, but on this particular person, they had a nice diversified portfolio of some stocks, some bonds, some commodities, real estate, a little bit of gold. Their year-to-date return, they were up 4 or 5%. And so all these gyrations happening in the market, if you have a strategic plan and you're investing for a goal that's more than 190 milliseconds into the future, we would recommend that you ignore most of the short-term gyrations of the market. Okay, on to the next topic. This topic, we received a lot of questions, a lot of comments, not only our show, around our firm, but I think the country in general. And it relates to President Obama and the Buffett rule. We talked about this last week. Since last week, I've done some more research at the request of some clients, as well as some viewers and listeners that wanted to know a little bit more about this. And so I thought I would continue with this topic one more show. A lot of this data comes, a guy by the name of Glenn Kessler, who writes for the Washington Post, has done research on this topic all the way back to 2001. He wrote an article that talks about income disparity skews the tax burden. And he talked about how the 400 wealthiest taxpayers pay about as much federal income tax as more than 40 million individuals and families at the bottom of the scale, according to the IRS data. And I remember this was back in 2001. Well, this debate has come up again. It's something that comes up periodically. I don't think it will ever go away as long as you have people that make more than other people and you have other people that pay less tax than other people. But what we want to deal with is facts and getting the facts straight. And I think a lot of the problem with this debate is people are throwing around generalities, like Warren Buffett saying that he pays less tax than his secretary, and people saying that the wealthy don't pay their share of taxes, or everyone at the bottom of the pay scale doesn't pay any taxes. These are generalities that are thrown around in the soundbite world that generally don't help advance the debate much. And so today I thought I would cover some actual facts having to do with who pays taxes and some of the commentary that's going on out in the marketplace today. Well, we're coming up on our first break, so we'll have to wait until after the break to get into this topic. So for All Things Money, I'm your host, David Blain, and we'll be back after a few short messages.